All right, happy Tuesday, everybody. It is June 11th, 2024, here at PreciseAlgorithmTrading.com. And tomorrow is Fed Day. Today was the first day that the Fed gets together and goes behind closed doors and talks about the fact that they're going to hold interest rates at the same where they're at already. I think that's like, I haven't looked it up, but last time I looked, it was like 90%, 95, or even 99% probable. So we can look that up. Go to FedWatch and look up the interest rate probability if you want to. I don't care. I do know it's going to move the market, and just don't know which direction necessarily. Even if they don't move the rates, a lot of times it moves the market positively because you just get past it. So, anyways, a lot of times if they don't move the rates, or if they surprise us and do move the rates, then that's going to throw everything. So, um, I would prefer to just keep looking at what we look at because it gives us at least probabilities in our favor. All right, here is our modified Dow futures contract, and today we had one trade and it was good. And note all of these stop outs that have happened in the past, because that's a theme with these trading systems. You get these stop outs to get this thing so it doesn't go too low when you have these pullbacks, and then you have your runners in both directions, long and short trades. And there's a short trade for $885. There's another short trade for $540. And then we have long trades for $2,300. Long trade for $2,200. The longs by far tend to win, but this thing can win in both directions. All right, this is the Russell. It's been hanging on for a long time, and I'm going to see what I can do about applying this math to that instrument over the weekend, and that'll be my next project. But today we did get some back, and you can see we have bigger stops, which and bigger losses, and that's what's contributing to this. But we do have still overall, it's a decent equity curve. I think I can just take most of this math and apply it to this concept, and we'll get there. All right, this is the same math for what it's worth, and today we just really had stop outs. So, and a bunch of them in the last 2 days. So we're due for something decent here. It's probably going to be, well, I think the market is going to draw down. I know it has been drawing down hard, but I think it might draw down even harder. And why do I say that? Well, let's go out of order and flip over to True Market Insiders. This is their website. They're using the Investors Intelligence bullish percent index, and it flipped over to a new column of O's today. So been watching for this. That's not to say like when it flipped over before, it stays here or can stay here for a long time before it flips back up again. The last time it flipped up was on May 15th. That's almost a month ago. The time before that was April 19th. So a month before that. And then the time before that was November 15th. And that was a long stretch. So what we need is probably this downturn here to hang on for. It'll be, well, probably a period of weeks, and then if we can get flipped back up again, then maybe we can finally get up and go and explore this territory up here, which would be nice and bullish and long. Since we're already out of order, we'll go do bullish percent indexes. Because I'm assuming these things were thrown all over the place and probably negative today. minus 5.88%. On the industrials, the NYA minus 2.5%. The transports didn't move. The NASDAQ down 1.58%. The S&P 500 down 2.81%. The S&P 100 down 7.69%. And the NASDAQ 100 down 2.08%. And so what we're really watching for is to see, are these going to stay bullish, especially the NASDAQ 100 and the S&P 100 after the Fed announcement tomorrow? Or are they going to flip over and everything can just, I'm going to say, finally come down, because this nosebleed territory up here that we've been hanging out in, you know, there's more room to the downside than there is to the upside, is at least what I see in here. Although we do have squeezes going on in both time frames, the hourly and the daily. And if I flip this to 4 hour, yeah, okay, it's not in a squeeze. Thought it might have been. But we could get maybe a blow off top looking type of structure if this thing decides to go higher, or we could get something that's like a high spike. And I just think this thing has more room to the downside because it's come so far and then it only pulled back this much. This pullback didn't even make it to 50% of that line, which now that I'm noting on here, I don't know why my 50% line's not showing right there. So, but that's the S&P 500, which today went up 14 points, or 0.27%. The Dow went down 120 points, which this is the one that's been struggling, although it's still hanging out at the 50% retracement. But there's not a lot of bullishness in this thing. You might wonder what this orange line is. That's a 21 period exponential moving average, and I'm exploring whether I'm going to use that as a hard stop or not. So I won't use it by itself. I mean, it'll come with some rules, but yeah, I'll get into that later, and not in this video, but later on. You can also use a 36 or a 50, and I'm probably going to have to do some math. Anyways, the IWM, or the Russell today, what's it look like? Looks pretty bearish. It was looking like a head and shoulders pattern. I'm not going to say it still can't be, but I mean, we are at the lower Keltner channel now, so maybe we'll see a bounce. I would welcome a bounce. I'm seeing, like I say, the bullish percent index rolling over is kind of it's like storm clouds coming in, so, or could be. So that's the Russell. Here's the NASDAQ. Oh, look at that. The NASDAQ is within 7 points of the 1618 retracement. I'd say we'll get that tomorrow. And just so happens, like dog here is this is an inverse ETF for the Dow, and this is a bullish looking chart. So full disclosure, I've got a position on it. And let's look at oil. Looks like it's starting to think about picking up and maybe break out of this wedge pattern that a lot of people will forget about, but I'm not going to forget about it. looking around, seeing what all signals I see here, guys. So, not a whole lot yet, but breaking out of a wedge like that could be fairly bullish and could have some pretty good upside to it. I'll want to apply some other technicals to it, possibly Fibonacci retracements and things like that. What else we got? Gold. It looks like it's poised for a move down, possibly further. Not to say it can't pull back up first. TLT bonds. Bonds are moving higher. Maybe. So that's probably something to take a look at. Let's. All right, I want to go backwards maybe and look at bonds here. So, okay, that's an interesting chart. Let's flip this back to the ES. Everything's still pretty high flying here. And then the VIX is right there in the middle. And add them all together, and this is pretty poised to go. It still looks high or higher, but I mean it's still bullish. But all it needs to do is break down, and that can happen on Fed Day for sure. So that's what I got for tonight, guys, and I'm gonna cut this. And good luck, everybody. Take care, and we'll talk to you tomorrow.